The operator is active. Now, the set of delivery is bullish based on what happened yesterday. We saw a 1 hour structure shift higher of this lower quadrant. This is the lower quadrant of a weekly discount week, and trading off that lower quadrant, we're expecting higher prices. Now, price rejects that level. We see a rejection of lower quadrant of the discount week, and we see price rally. It does not close above the high of the previous Monday and Tuesday candle. This candle encompasses Monday and Tuesday. This is the Wednesday's candle. It takes the high, shifted structure, but it's not close above it on the daily chart. That's not as strong. That's giving a few hints about weakness, but still on the lower time frames will break down the narrative. Moving down to lower time frames, you can see that on the 1 hour chart. On this 1 hour chart, you can see I have delineated a 4 hour order block and a 4 hour volume imbalance. So the pin roller is rolling the brush. That's the delivery of price. So it's rolled down, it's rolled up. But notice here, this is the current new week opening gap high and it's low. This is a massive inefficiency. Sell side delivery is absent, buy side delivery is absent. Upon this displacement higher, we see buy side offered here, some sell side here, and here we see a massive rally higher, closing in this new week opening gap. So it is delivered with the buy side. Now sell side has not yet been delivered. So going into the session, I was looking to see a move that would deliver sell side to this range and to this range as well. But mostly the upper part of this current new week opening gap is inefficient in sell side delivery. On the 15-minute time frame, going into the session, Asia had seen Asian open and Asian lows were taken going into London. London rally taking Asian high and New York PM high on electronic trading hours. Going into the New York AM session, we saw this consolidation. London launched high and low coming here, and at the open we see buy side taking. Later on we see a massive displacement lower, and this is a move of the day. This is a bearish displacement, redelivering sell side delivery to the range of new week opening gap high to new week opening gap low. So bring your attention to the left side of the chart. This is regular trading hours, and you see we opened higher, so we're opening in a premium. That's relative to the opening range gap. We're opening in a premium. During the opening range between 9:30 and 10 o'clock, we're expecting to see a 70% chance of mid gap shaded to. That's bearish. Compound that with the fact that based on the opening prices, midnight openings here, we're opening at 9:30 here, and at 9:30 we expect to be trading in a discount. We're looking to buy, but at the open we're trading deep in premium. We're above the 8:30 opening price, we're above the midnight opening price, and looking for a sell-off to this as low-hanging fruit is not a bad idea at all. Moving to equilibrium at midnight opening price is also not a bad idea. As a matter of fact, that's Chairman's model, and we'll be seeing it on the lower time frame. On the 1 hour time frame, we see this raid on Wednesday and a massive displacement higher. Structure is clearly bullish. We're looking for support at constant equation of the weekly discount week. We got it at the lower quadrant of the weekly discount week, and after this move higher, going into the session, we see rejections of 4 hour order block, 4 hour volume imbalances, but all this is retrospectively. The painter is rolling the paintbrush back and forth, ensuring there is efficient delivery, especially within the current new week opening gap. Dropping down to 5-minute time frame, the arrays that we're present for this session, the M5 market structure shift, we see a liquidity sweep above these highs and a mitigation block here because this high is lower than this one, but there's an SMT at these highs with the S&P 500. So SMC divergence forms here, and we see a 5-minute market structure shift lower. This market structure shift comes along with a breaker, 5-minute breaker, and this down close candle closes below the candle that swept liquidity, moving higher. So that's the 5-minute chain of delivery. Price hits all of these levels as it trades up, so there are multiple methods of engaging this trade setup. Moving to the 1-minute time frame, you can see that shorts are actually high probability during the opening range. So I'm looking for shorts during the opening range. The bias is bullish because of the bullish market structure shift, but I'll be looking for longs maybe during the silver bullet. But during the opening range, there's a 70% chance of seeing mid cap traded to. Mid cap got perfectly traded to here. Also, launch lows were very clean. Pre-market lows were swept, as you can see. So the most logical objective was the lower quadrant because it aligned with midnight opening price. Trading down from a premium to equilibrium and midnight opening price is Chemo's model, and that delivered perfectly. Also, the lower quadrant of the opening range gap is at that same level, and we see it on regular trading hours hit as well. Full gap closure was evaded, but we saw during the opening range our expectations were met. Massive displacements lower to mid gap and to the midnight opening price. Entries were off 5-minute breaker, 5-minute chain of delivery. I did not take this straight. I made my entire week's objective yesterday on the move in line with the higher time frame bias, so my higher time frame weekly expansion narrative. I was looking for higher prices of consequent encroachment of the weekly discount week, and I got that move hitting my weekly objective in one single trade, and that was phenomenal. Without any pyramids, without any over leveraging, risking 0.5%, I got my full week's objectives, and I did not take this trade. I'm looking at it retrospectively. So we see this low coming in at the current new week opening gap low, and price retraced back into the range. Let's look at launch and the PM session. So during launch, we see it move into high resistance, liquidity run, marking time back and forth. After the 130 opening, marks time, and this is just some nastiness. But then price begins to gravitate lower. It moves lower, retracing down to the old new week opening gap, and we see relatively equal highs left here across all indices. This is a sweet buy side liquidity pool, and I'll be looking for this to be targeted tomorrow. That has been it for this breakdown. If you had insight from this, leave a like, subscribe to the channel. That really helps us out. I'll see you in the next video. Stay strong.